Hello, I'm Donald Leggett and welcome to Share Views, brought to you by the financial website London South East. Today I'm joined by oil analyst Barney Gray, who works as a consultant for corporate brokers Turner Pope and Optiva Securities, amongst others. We'll be talking about companies making the news, Thalia Resources, Coro Energy, the Colter Well, Reabold and United Oil and Gas. Welcome, Barney.
Thank you.
Well, you spend your life studying AIM-listed oil and gas explorers. So what for you makes a good company? What are you looking for as an investment?
Well, I would say three key things when you start to look at a company. They're no great mystery. Look at the management, in particular with small, risky AIM stocks. You're looking at management who've maybe done this before. They've got a track record. They've got some experience. Often, with a lot of these companies, they've got big company experience which they bring to the small independent sector. So that can't hurt, because if they've done it before, investors have something to base it on and the confidence that they can repeat any successes that they've had before. Secondly, without question, you've got to look at the assets. Are these assets good? Are they appealing? Do they have potential? Can the value in them be unlocked with what often can be relatively modest sums of money? So you're looking, if you have your wish list, you maybe get a lovely balanced portfolio of development, appraisal, production, exploration, but sometimes that's a fantasy company. What you're really looking at is a strong key asset, which I think with the companies that we're looking at today, you will see that there is always.
I was going to say that. Do you regard the companies we're looking at today as some of the better ones?
Yes, in terms of the asset stories and the asset plays, they're strong, and you don't have to compare apples with pears. If you're looking at a good exploration story, that is one thing. If you're looking at a near-term development and appraisal story, that's another thing. And I suppose that brings me on neatly into the third point, which is there an exit strategy? What's the end game here? And I always find that sometimes early stage companies can be reticent to say, we're going to take it to a certain point on the value chain and then exit. And if that means after a good appraisal result and you can sell it on, brilliant. If it's after a good exploration well and you find that you've extracted a maximum amount of value for where you can take it, then always be looking at the exit point. I think that's important. Not everything has to be taken through to a full development plan, even though that doesn't necessarily apply to our companies here.
Okay.
I like to see a clear pathway ahead for the strategy.
Good advice there, Barney. Okay, let's turn to the companies making the news currently, and we're going to look at Thalia Resources, run by Jeremy Asher. Now, he seems to have landed on his feet here, because in South Africa, Total are claiming to have discovered a new world-class gas and oil play at Brulpadda, offshore South Africa, which happens to be right next door to Jeremy's assets in Namibia. To what extent will that good news feed through into Thalia, do you think?
Well, the lovely thing about exploration success in neighbouring blocks, and you're right, the Brulpadda well is it's relatively close in oil and gas terms. It's maybe a couple of 100 kilometres away.
I worked that out because it's South Africa offshore and it's Namibia offshore.
Exactly.
So
these are big areas.
Big areas,
near and far are all relative, as you quite rightly say. Yes, this is kind of, while the Cameroon story is very much there, and I think we're going to come to that. The South Africa story is really good news, because any success from your neighbours in oil and gas is good for business.
And the share price has gone up a little bit.
It has. It's reflected in the share price. What their block is, they've got this big block offshore, and much of it is in the shallow water, but a large portion of it is in the deeper water Utanika Basin, which is where the Brulpadda well showed a discovery. Now, this well had been a story for a good number of years, so much so that Total came back to this well after the original rig in 2015 wasn't quite up to the job. They got a new one in, and of course in it came up to 1 billion barrels of gas condensate. So that's a huge discovery in a relatively a good market like South Africa, where there's huge demand for gas. And
would it be a mid-term play for Thalia, though, given that the Thalia Block is really where Jeremy's interests lie?
Yes, I mean, you're quite right. It's a mid-term play. What it's done is it's focused attention on South Africa. They've got 50% of their block, and now the majors will be looking much more carefully at South Africa, saying, what acreage is there? What could we go for? What could possibly be available? Now, that's not necessarily to say that Thalia's block is available, but everything's for sale at some price. And
Tar clearly don't have they don't have terribly liquid assets at the moment.
No, not at the moment. Not until they've got some kind of production from Cameroon. You're quite right. And
so let's turn to Cameroon.
Why not?
Tell us all about Cameroon. In theory, they're supposed to be drilling Q2. Is that going to happen?
Well, drilling pending financing. Let's get the slight unknown out. Is that Jeremy, as he's said on a number of presentations in recent weeks, he's in discussions looking for financing. The scale and the scope of this is not something that's actually known, but you know, they've published enough information to show that it's in the tens of millions of dollars to move the Njonji development forward. It's a great little development project. It's in an area full of infrastructure and other discoveries. It's about 18 million barrels of contingent resources, and one of the wells, they're planning to drill at least 4 to develop this initial phase of the development. One of the wells will be extended to the Njonji South prospect, and if that comes in as well, that could easily double the size of a potential development. So it's potentially a very exciting development pending financing.
Okay, happy days for Jeremy and the team.
Yes, and there's also upside on that block as well, that Thalia licence which you mentioned. They've got large prospects to the north of the licence which they can also drill, and they do have a very nice advantage with their PSC terms, the production sharing contract terms, is that any exploration drilling done on the other prospects can be cost recovered through production once Njonji gets up and running. So
I didn't realise that. That's
it's
very
nicely contained in the agreement.
That's very interesting. Okay, let's turn to Coro Energy, which is part of the James Parsons portfolio. And they've just bought a second gas asset. They've got one in East Java, which is more a mid-term prospect. It's going to take a little while to get through. This one's called Duyang, and it's in Indonesia.
Yeah.
What difference does that make to Coro Energy?
Well, they're really coming good with this Southeast Asian strategy. They've really tapped into the Indonesian market, and these two assets, they've got different percentage interests, but they're similar sized gas assets. They know how the market works out there. It's a question, you know, with the Indonesian authorities, if you get the financing, the oil and gas is most definitely there. It's demonstrating your capabilities as an operator, really. And if you've got gas markets all around it, particularly Singapore, where pricing is good.
I understand the gas is going to come back out and go to Singapore.
Well, yes, it's a natural place, and it's not far away. It's the pipeline tie, I believe, is about 16 kilometres, which is you know, the width of a thumbnail in oil and gas terms. Quite. So yes, so strategically they're acquiring the right assets. They know where they're looking, and they're and the upside for these will be very similar. So
what's the funding for that project, and what's the time scale that they can start extracting gas in?
Yeah, I mean, the time scales, you know, you're still looking a couple of years, but with the Eurobond issue that they announced at the same time, they've got some initial, when that's agreed, naturally that's I think March, early April time that would be agreed, they can crack on with that basically, and you know, these developments, once they've got that funding, remember they've got 15%, so it's, you know, they're not funding the whole thing. They can crack on with all these. You know, these are reasonably big gas assets. They all need significant funding. But when you have a gas sales contract, which is generally a tipping point, you can start negotiating financing terms and push on with the development.
They're trying to organise a gas contract on the first of their assets, if I understand.
Yes, well, in a lot of cases, if you get a gas sales contract, you can then convert resources into reserves, and then, as the terms imply, reserve-based lending can kick in. There's still risk, naturally, but that's reflected in the interest terms that you'd pay on a financing agreement.
So Coro's CEO is called James Menzies. James describes a very nice man. He describes his company as a grown-up. He wants to build a grown-up gas company with grown-up assets.
Yes.
How's he getting on?
Well, they've certainly taken a big step up. As you know, that it kind of spun out of the small Italian assets, which were the former Saffron energy assets. And they've demonstrated that they understand gas. Italy's not the simplest market in the world, but in terms of proving themselves as an operator, they've done that in Italy. That carries through. That does carry some weight in Indonesia. And so in terms of the size of the assets that they're looking to develop, it's a major step up. So yes, he's justified in saying that.
Great. Okay, let's draw a line under Coro and talk about Colter. Colter's an appraisal well close to the Dorset coast. Why are people so excited by this?
Well, it's it sometimes takes a bit of drilling a well in the UK at the moment because you can more or less see this from the coast. Colter is the second well in a two-well program, and there was an early one called Wick, which was exploration, and that one didn't come in. But the rig has since moved down, as you say, in earlier this month to drill the Colter Appraisal well. This should be lower risk, a lot lower risk than Wick.
But this sits close to an existing field, doesn't it?
Yes, it does. Very crucial. It sits very close to the Witch Farm development. Now, Witch Farm's still going, but the infrastructure's there, and Witch Farm was a very good example of a very environmentally sound development, which is the benchmark for what Colter would be. Now, Colter's got a very high chance of success. It's not a huge accumulation. It might be 19 to 23 million barrels, depending on which of the partners' views you subscribe to. But if it comes in, it's greater than 50% chance. You have that's quite a large accumulation for something so close to infrastructure and in such shallow waters. So that if that could get development approval, that's a great little add-on to the Witch Farm development. And
who of the companies that we've heard of have got a chunk of that asset?
Well, as you know, Corallian, a private company, are the operator, so more slightly restricted in what you can say about a private company. But one of the companies I do look at, you mentioned them at the beginning, United Oil and Gas. They have a portfolio of interests in the UK North Sea and obviously this part of the offshore. And Colter's one of their key assets. Simply because it's
10% or so they have.
It is. They paid a little extra on the initial well, but that's all standard stuff in terms of farming terms. And so if this comes in, yeah, they've got nice exposure to what could be a couple of million barrels of oil easily.
So United are in there, Reabold are in there. Reabold it's slightly complicated. Is it bigger or smaller than the United chunk? I didn't quite.
Indirectly, it's about 16%, I believe. They hold their interest in Corallian as per their slightly different strategy to a lot of independent oil and gas companies.
Yes, Reabold's a very interesting company, aren't they?
It is, and they've built a portfolio of investments in operators themselves. So what's nice for them is they get exposure to more than one well sometimes. Yes, they do participate in placings from these private companies, but they've had exposure to Wick. I know that one didn't come in, but they've got Colter. Corallian will possibly drill the Colter Well offshore North Sea, and Reabold have exposure to that if that drills later this year. They've also got...
what I like about that is there's lots of near-term exposure.
Yes, well, that's...
You don't have to wait around 5 years before it comes good.
Not at all. Everything for Reabold, you've got this lovely 12-month horizon. You've got a couple of appraisal wells potentially drilling in Romania, where they've got interest in Danube Petroleum. And they've got the interests in the US, which are producing now. So straight away, that's as real upside as it gets. And as I say, they've got the Colter Well, so they're looking at lots of interesting assets, and their strategy really is paying off.
Barney Gray, thank you very much indeed for joining us today. You've been a complete star. Thank you for sharing your wisdom with us. If you would like to see the Tower CEO Jeremy Asher in person, he'll be speaking at our Oil and Gas Investor Evening on the 12th of March at Brewers Hall. I'm sure some of you watching this have been there and enjoyed those evenings. Come and join us in the city, and let me take this opportunity to say thank you for watching.